Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADMISI Services International Limited, and here is your daily technical analysis of Brent crude oil and spot gold. I'll start with ICE Brent crude oil futures. A bearish engulfing pattern on Friday, which wasn't that hard an ask, as the previous session was an indecisive doji cross. However, the market did fulfill a function. It dropped down and closed the small gap between 85.67 and 86.26, left over from between Wednesday and Thursday last week. Overhead, we still have the penetrated but not very recently closed over resistance of the significant 50% Fibonacci line of the November 2020 to March 2022 move at 87.41, as well as now the October 2018 high at 86.67. Importantly, we are still well within both the bear channels. Now, I had previously spoken a lot about the twin bear channel idea I had for this market. We had a late July to date bear channel, currently at 71.75 to 89.75. This had previously, well, the upper bear channel line previously had been broken, but has seemingly repaired itself since. This is the smaller of the two bear channels. We also have a second, larger bear channel idea. Both the bear channels have the same lower bear channel line, currently at 71.75, originating from early August, but the second larger bear channel utilizes the March to date downtrend, currently at 100.51. There is one other item, a bit of an elephant in the room I'd like to talk about, and one I've previously mentioned many times. It is the November monthly key reversal down. We haven't seen a major move lower on the back of it as yet, but it is after all a longer term pattern. But it is worth remembering and considering. So far today, a slightly lower open, but a move up over the October 2018 high as well as the 50% Fibonacci line at 87.41, but stopping short of testing the first and previously broken upper bear channel line. Spot gold. An interesting pattern on Friday. On the surface, a hanging man pattern, but it was also the second consecutive close over not just the declining long moving average, currently at 1794, but also the formidable congestion band between 1779 to 1788, plus over two congestions at 1771 and 1754. It was the highest high since early August and the third highest close since early July. It was also the beginning of a vindication of the large monthly key reversal up we saw in November. Interestingly, the two areas it did not manage to show a consecutive close over were the neckline, currently at 1800, of the December 2021 to date head and shoulders top, and the interesting congestion 1807. Looking further above, we have the primary target X2 in this 1815 area with a secondary harder to achieve target X3 in the 1862 area for the late September, early November triple bottom, though target X2 is not that far away. I'm nevertheless still wondering if these may or may not be big asks here of this market. Now, so far today, an interesting move up over the neckline and also the congestion at 1807, but not quite enough to reach target X2 as yet. Additionally, it does not seem sustained right now, as prices have dipped back down, still using the long moving average as support, but are now below both the neckline and also the other congestion at 1807, and looking like an indecisive doji cross right now. Watch this space. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADMISI Services International Limited. And here comes the final bit.